My name's Looney. I'll go last here, but we'll just go around and tell us who you, oh, and by the way, it's late. We have one panelist who needs to catch a train. So he's gonna, when one of them leaves, you don't have to follow him. So let's just quickly go who you are, who you're with, and just like 2 sentences on what it does, and then we'll go deeper after that.
Sounds good, thank you. So my name is Loïc Badoun, and I'm working as investment manager for IDH Investment Management, which is the investment arm of IDH, which is an agri-NGO in the Netherlands. So we manage a fund of 100 million euros, which is called IDH Farm Feed Fund, and we invest in agri-smallholder finance. So we need to demonstrate our investments lead to better livelihood for smallholder farmers. And I'm in charge of a portfolio of IDH Investment Management in West Africa and Central Africa. Good to see you all.
Thank you.
Thank you, Looney. My name is Thule Lene. I'm not Jennifer Bond. From AGRA, I'm the Chief of Staff at AGRA. And AGRA is an Africa-based institution. We're in 12 countries, planning to grow into 15 countries. And we're focused on food systems transformation through investments in small-scale farmers, farmer-based organizations, cooperatives, and SMEs. And more increasingly looking at how to make programs scale with private sector support. We do a lot of support with governments. We provide technical assistance and policy support to make sure, I mean, one of the earlier panels that my fellow panelist here is on, we talked about was on making sure the policy frameworks are create enabling environment for agriculture investment, and that's part of the work that we do as AGRA.
Great.
Yeah, I'm Seelan Gobelsamy. Thank you for having me. I'm the CEO of Omnia Holdings. We're an agriculture, explosives and chemicals business in 25 countries and about 4,500 people. We started 70 years ago on the African continent, and Africa is our home. Thank you.
Good afternoon, Eren Kelexi. I'm working for the African Development Bank in charge of private sector operations for food and agriculture across the continent. So we're a development institution financing both the sovereign operations and the private sector operations across the continent, across the 54 countries in Africa. And we are bringing a wide range of instruments and tools to support the agricultural and food processing sector in the continent. And I'm sure we'll have the opportunity to dig further into those during the session.
Thank you. And then Africa Eats, we are a permanent capital vehicle. We look like a lot like a fund, except we're not. We're open, you can think of it as an open-ended instrument. We invest currently in 22 companies in 8 countries across Africa, all building the food and ag supply chain. So the topic here is food security. I like to just think of it as hunger and poverty. It's a lot simpler words, and it's right there in the SDGs. And let's just jump back. Like, what's food security mean? Like, and just jump in.
So I think from our perspective, what we observe in the food industry in Africa is that there is a real paradox in between the growing demand, the needs, and the lack of output and supply of food product, of basic food product in the continent. So in this context, for us, food and agriculture means 2 things. One is how do we keep jobs at home and how we do keep hard currency at home. So it means basically increasing the added value and the processing cycle on the food space to diminish the level of imports that the countries are having. And the second point is really around food security. So how do we invest and make agriculture a productive and profitable enough to secure the right amount of output to feed the increasing demand that we have in the countries.
Any order, let's just not go back and forth.
Yeah, maybe, sorry, please.
No, I was thinking, I mean, it's, at the bare minimum, it's obviously a family's ability to feed itself, but consistently, right? And whilst we look at food security more and AFDB, which I appreciate, does large-scale investments, IDH and AGRA are looking at how do you make sure small-scale farmers are then able to move from the subsistence, daily scratching of the earth to then be able to feed themselves more than just for today. It's about looking at the ability for them to look up and see tomorrow, and how do all of us in the ecosystem ensure that we're able to support that. It's not just the large-scale investments, it's also how do you make sure that small-scale farmers are able to survive, to thrive.
Yeah, I like that line. What was that? Look up. Say that one again.
They
where
need to
they
be able
look up to see tomorrow.
Yeah, they need to be able to look up and see tomorrow, because every day they're looking at today. What do I need today to survive? And it's that constant cycle of poverty that we've just seen our farmers stay within. Of course, it's partially because of the size, but then how do we ensure that they continue to be supported?
I think we are fully aligned. Regardless of the definition of food security, what is striking this year, actually, we will discuss about it, about the challenges, especially, the lack of access to finance, which is significant, actually. That's quite striking, actually.
Yeah.
Yeah, I guess for us, it's the noble purpose of knowing that a hungry child is not a child that can learn. And, we want a child to be fed. We want societies to be fed so that they can grow and prosper and be better. So it's a very primary part of what we do from an impact perspective to sustain life. And it's the starting point for whether it be education, whether it be the future.
Okay. Yeah, I agree with all of that. I'm not going to add to that, not in that way. But 10 years ago, I've been investing in food and ag in Africa for a decade. And the first entrepreneur to come through my program, it started as an accelerator. The words he used was post-harvest losses.
Yeah.
So that's the reason, but like the root cause, if we have to point to something, is post-harvest losses. And he educated me and said, no, Africa grows plenty of food. That's not the problem. More than enough food gets grown for the billion people who live there, but too much of it gets lost along the way. As long as I have some experts here, how much? Like everyone quotes the same number, but like nobody has any citation for why it's the number. How much gets lost along the way?
For me, I've heard from 40%, actually.
Yeah, that's a number I hear, but no footnote on study. Where that
Well, for us, before I joined AGRA, I was at Ministry of Agriculture, the head of the Agriculture Transformation. Wait.
Okay. Sorry.
In Kenya.
Okay.
Sorry. And two of the studies we did actually were on potatoes and mangoes. And one of them informed a program. Well, actually, they didn't quite pay attention to the data because they thought that there was a better investment thesis on the loss of mangoes. And thinking that we could do a processing plant in an area called Malindi. And so they were losing 60% of the mangoes because, mangoes come, they get eaten in a season, and whatever, remains gets thrown out. Whereas potatoes, we're losing 40%, and we certainly saw it. And we now need to see a lot more investments in post-harvest loss management. But more so market connection, right? Post-harvest is just...
I got an answer to that, but
it's one piece of the element, but how do you then ensure that there's consistent access to the next step in the value chain?
Yeah.
I know we're talking about post-harvest, but if we just think of harvest itself, we have a farm where we've been helping them achieve yield enhancement, and they, on average in that region, get between 2 and 3 tons of avos per hectare. And with some unique, innovative technologies, they're now getting between 12 and 14 tons per hectare. So you're looking at, call it a 4- or 5-fold increase in the harvest. So if I look at the entire value chain, I think there's inefficiencies in all parts of it that probably can be taken away or enhanced the yield significantly, and will make the 40, 50 or 60% even more so if we can just be more efficient with water, with nutrient, with soil conditions, and increase yield from that perspective as well.
Yeah, anything to add?
No, I think from our side, and I'll be able to share some data with you because we had to dig a lot into that when we did our first investment in cold storage systems in East Africa. That was in Kenya that we did that. So I think that's one of the first very important pillars of what the AFDB is doing, which is involving the public and the private sector at the onset to basically invest in infrastructure. Infrastructure meaning the storage systems, the logistics, the transport, the roads, the access to energy, and that's what we do across what we call the special agro-processing zones. We mobilized, as of today, from our own balance sheet, almost 900 million into that. We raised from fellow partners around the same amount. So we have today a total of 1.8 billion invested purely in those agro-processing zones across, as of today, 11 countries through 32 zones. And this is phased out into new projects that are going to come in the next years.
Great, thanks. And I'm gonna, since we have an audience, wow. Since we have an audience, does anybody actually have another source of actual data on what the post-harvest losses are? Raise hands. No, I see phones, but no hands. Yeah, I just keep seeing, I had heard the 30-40% number from a Rockefeller study from like a decade ago, but I can't find it. It doesn't exist on the internet. I don't know if it ever existed, but it's always just written as 30 or 40%. And I had a cold hubs from Nigeria came through Fledge like 15 or 16, long time ago. And the anecdote that they had, like if you think the post-harvest loss is bad, what he was describing was that the tomato farmers in Nigeria would be on their phones to find out how busy the markets were with tomatoes. And if they were too busy, like there was just too many people selling tomatoes, they just wouldn't harvest that day. And after a while, they just didn't harvest, and the food just rotted in the field. And so it's not really post-harvest losses, it's post-growing losses. And I don't know how widespread that is, because again, I can't find any studies on this. Anecdotally, it's bad. Anecdotally, it's basically half the food is lost. Right? Half the food never makes it to a plate. Roughly, maybe it's 40%, but close enough. Half the food, which means that the continent imports food, which means that some of the debt that's in Africa, except Botswana and a few other countries, is literally being borrowed in order to feed the population, even though they grow enough food.
Yeah, but Looney, I think part of what we need to then be able to do is continue to invest in the infrastructure to process, like how AFDB is talking about SAPZs, right? Part of the challenge, certainly, because I know they did a massive study for Kenya. I mean, I still have the 498-page report on the SAPZ's opportunities. There's also got to be a government that's willing to take on, because it's debt, right? And how are we making sure that...
It's investment, just to be clear, because don't do that. Because we invest in companies that buy from the farms and do some processing.
Yeah, but that's your investment. I mean, like in terms of, if we're talking about large agro-processing zones or agro-processing parks, you have to then look at how do you make sure you're bringing in the ability for private sector to also invest, so that a government can feel comfortable to take on that additional debt. I mean, for Kenya, for example, it was at its debt ceiling and was not able to even, we just parked it on the side.
Yeah, this is the part I don't get. Yeah. So I'm not African, I'm American, accent, all that. I don't understand why more Americans aren't investing in this continent, in this space. Like this is a great place to make money as a capitalist, and we solve poverty and hunger while we do this. And I'm out there advocating to family offices and institutions, but mostly family offices, to come and join in. And we have hundreds of family offices who joined into our side, but I just want to see, I want to see competition. Like I don't have any competition in investing in these young companies, because nobody else is investing in young companies. But before we go there, there's something everybody mentioned, or almost everyone mentioned, which is, I'd say, fairly unique in Africa at the moment, which is smallholder farms. So if we were sitting here in Latin America talking about investing in food security, we would be talking about big commercial scale, 100-hectare farms, but we don't do that. So how and why? Like what is special here? Personally, I think it should stay that way. It should stay smallholder farmers, right? Because most people are smallholder farmers. But like, what's your view on smallholder farming versus large-scale farming?
I mean, my view is you need both. I think smallholder farmers need a bit more coordination. It's important to have the inputs and the seeds and others that are needed at the time when the rain arrives. But you also need large commercial farmers.
Why?
Because they have a role to play in terms of GDP growth. Most economies on the African continent see agriculture as a big part of GDP growth. Smallholder farmers, obviously, there's a subsistence part to it, and there could also be a coordination and a bigger role to play beyond that. The one thing I do want to add about large commercial farmers is they often have access to lots of capital, the latest technology, the best equipment, the greatest data and science. And what we've been able to do is take these two different sectors and underpin them with the same level of innovation. So we bring the best of the world to large commercial farmers and to small subsistence farmers. We bring the same technology, we do the same soil samples, we use the same data, and I was saying previously in terms of our risk analysis, yield analysis, soil quality, crop quality, our dream is really to provide exactly the tools that the large farmers have to the small farmers and make them, in a way, make them equal. From a tool perspective.
I'm going to disagree. I'm going to debate and say, if it's true that enough food is grown on the continent for 1 billion people already, but a lot of it's lost, if we simply don't lose it, if we invest in the supply chain so that food isn't lost, then we don't need the commercial farmers.
Yeah, but you need to aggregate it.
Oh, sure, we need to aggregate it. We need to build cold storage.
And it's a lot
we
of
need
farmers,
transport.
and they're not close to each other. They're also, it's something that we're looking at for East Africa. Ethiopia's done it well by clustering farms, right? Clustered farms makes it easier for a post-harvest loss investment, like a warehouse or a first-level processing, to be put in place. But if farmers are disparate and all over the place, it's very difficult to aggregate that product because there's a cost element as well to it. As much as we say we grow enough food, there's a cost element in delivery to the plate, right? And to the buyer.
I fully agree with you. Talking about clusters, also co-ops, for example. It's a way also to solve these challenges also. And I think the problem is much more complex than just post-harvest. Because I think the deficiency are all along the supply chain. That's the reason why also local financial institutions are not financing smaller farmers. It's also something we should highlight also. They don't get access to finance from the beginning. Yeah. Because it's much more complex. At the beginning of the chain, of course, getting access to finance, to be able to grow crops, input financing. Then, of course, after that, it's about aggregation, as you highlighted, storage also, be able also to invest in storage, processing, which is critical also, to be able also to mitigate these risks also. Yeah. That's along the whole supply chain, there are deficiencies. Good. And financial institutions should play a role there, local.
Great. I love the debate. I want to make it clear. I don't invest in farmers. Farmers are risky. I invest in aggregators.
There you go.
So I'm agreeing with you. Yeah, we need the aggregators. Yeah. It's the aggregators that, yes, it's complicated for them to go and aggregate from 50,000 farmers, but they do.
Yeah.
Maybe just to push this point harder, the value generated by the farmer is different to the value generated throughout the chain. And we have a dream that we want everyone to share in that wealth. So what you ideally want is what the small farmer is generating, for that small farmer to actually share in the economic value all the way up the chain. And as a single small farmer, that is very difficult.
What do you mean up the chain? They're the end of the chain, so.
Well, I would say they're part of the chain. So, if the crop is produced, it's then sent to an aggregator, it's then sent to a trader, it's then maybe exported. If you're a small farmer, if you're a big farmer, you may be playing more parts of the chain. And I guess our dream would be the impact of farming, the economic growth generated by the farmer. A chunk of that must be shared by the farmer.
Oh, sure. Yeah.
Shared in a way that makes sense.
Yeah, there's too many middlemen between farms and cities at the moment. And the way we're doing it, there's one aggregator between farm and city. So we leave a lot more money with the farmer.
Yeah, I think there is a net of the supply chain issues and logistics and storage problems. There is a question around volume of production in the continent. And it's not really a question of smallholder farmers versus commercial sizable farmers, because anyway, smallholder farmers are the bulk of food production as of today. But if you don't have a sizable and reliable primary produce, you cannot have a processing, and that's really key for the continent. So a lot of the business owners who are involved more on the transformation, on the FMCG side of the business, are sometimes reluctant because they don't have the capacity to secure from the smallholder farmers the necessary inputs for them to basically put significant equity at stake, in these markets. So the challenges are different. I think adoption of technologies and access to finance, sustainable practices, capacity to provide the right inputs to smallholder farmers are very important. But you need to have also a sort of a strong network of commercially driven, sizable producers to make sure that a processing facility does not have to get into agriculture because they can't secure locally, because it's a different expertise and it's a different job. And we see a lot of increasing African champions active in processing as of today. And we also see people who were more involved on the trading side moving to processing as of now. So I think it's a combination. Organizing, and you see that's what big companies have been doing over the last, let's say, 5 to 7 years. Organizing, relying solely on the smallholder farmers via an aggregator is putting a lot of pressure, one on the aggregator, two on the trader, which is required to also sell now traceable produce. So it is increasing a lot of the pressure that you're putting on entities which do not necessarily always have a control over the quality of the produce. So this is also a challenge, I think.
Oh yeah, we've seen that. Our biggest honey producer is tracing it all the way back to the beekeeper, who only has a handful of hives. So we're talking about little bits of honey per farmer, thousands of farmers to get barrels of honey and then containers full of honey, all traced. It's doable, but it's a lot of work. So 70 years. So you haven't been doing it personally for 70 years. What's changed in the last, what's different now than 20 years ago, if anybody knows?
Yeah, I think the biggest thing is, our farmers have been able to produce more with less. So use less water, less land, less inputs, less cost, and the yields have gone up. The way we're doing things now versus the way we did things 20, 30 years ago, today it's all scientific, it's precision farming, it's accurate. We have probes in the soil, we have cameras looking at imaging. It's better for the environment, it's better for the farmer, and and less inputs are being used. So it's actually a scientific approach to agriculture and farming, and that's made its way all the way into post-harvest. So we do their products and solutions for the soil, for the plant itself, for the crop, for post-harvest, and I think that's the innovation, the creativity, the R&D, the data and the science that will continue to drive agriculture in the coming years. Very, very precise.
Yeah. And knowledge, it's exactly what you mentioned about science, but also knowledge in general also, I think, is something also which has also significantly improved also. It's about also, for example, data, what can we learn also, what works, what doesn't work also in terms of production, being able to share also, findings about it. Technical assistance also, good agricultural practices also, for smaller farmers and for big groups also. This is something also which has improved also, so we should also be mindful of that.
Yeah, I think even as you talk about knowledge, there's two sides to it. There's access to knowledge, but there's also ability to use it. I think what we need to then look at, as we've seen a change, with farmers intensifying the use on their land, how do we ensure, one, it's more sustainable? Because We're really running a scorched earth policy. Most of our interventions, it's farmers must use a specific fertilizer, and unfortunately in a lot more jurisdictions it's more fertilizer than less fertilizer. But also less investment in extension support to our farmers, mostly, yes, driven by private sector, which I think is great because it increases sustainability. But how do you make sure that it's fairer and more inclusive in that, a small woman who has 1 acre in a very far away part of, let me say, Western Kenya, is able to access the same type of information to a larger farmer closer to Nairobi, and can quickly respond to the requirements of that support, right?
Yeah.
I think that's one of the things that we also need to be looking at. That's what's been changing as well.
They can all text Shamba shape up now.
Well, yeah, sure, if you make it free and accessible, for sure.
But maybe one thing, because you mentioned also what has improved also, but I think we should be also mindful of what's getting worse also. And so about the soil degradation, for example, we have been pushing for more and more, production, more and more productivity with some, adverse impacts also. And I think where, we could play a role also as investors, this is also to invest in really long-term, for example, restoration projects also, which we lead also in the long term and also to move to more food security also. Something also, that's maybe something we should also look at.
Anything to add?
No, I think the quality of entrants is very important, as highlighted here, because of the price and because of sometimes the subsidy system in certain countries. You have a tendency of smallholder farmers to basically get into very low quality fertilizers, especially those that are, sort of traded on the black market, left out from mining companies. So that's extremely important in terms of making sure that the sustainable practices are properly in place.
Yeah.
Okay.
I just want to give one example around a 50 kg bag of fertilizer, because if we think of a small subsistence farmer, generally we're talking a 50 kg bag of fertilizer. And you asked the question of how have things changed. There are products today that enhance the efficacy of the fertilizer, the water, the sunlight, and others. And there's the ability to reduce the 50 kg bag to a much smaller bag and have stimulant, greener products added to that. So there shouldn't be a need to just continuously think of inputs like fertilizer to be more and more.
So how long until that is ubiquitous for the rest of sub-Saharan Africa? You're South Africa, right?
Yeah. So we obviously have a lot of things to come together in the different countries in Africa to have this effective. But if I were to give you a case study, currently our group coats 800,000 tons of fertilizer in India with this stimulant product. So we take a typical granule, it's coated with that. Mm-hmm. It allows you to use less granules, a smaller bag. It enhances the efficacy, it enhances the yield. And it allows, and India is a space where there's a lot of small farmers, predominantly women. You don't want someone to be carrying a 50 kg bag on their shoulder necessarily. So there are innovative new technologies that can be brought, to the continent to make things better. And
there's a lot. There's one in Seattle, one by me. I personally invested 10 years ago into this company. They harvested some fungus from the hot springs of not Yosemite, Yellowstone. They discovered that if you coat the seeds with these fungus, right? So it's not a chemical, it's not an animal, it's a fungus. You coat the seeds with this, you plant the seeds in the ground, and this is maize and soy and other crops. If there's a drought, then you get 80% of the yield. If there's a flood, you get 80% of the yield. If there's a heat spell, you get 80% of the yield. The upcharge of coating the seed is like 5%. But it's a biological product, so it is not found on the continent because no one's tested it yet. Yeah. Sales are slow in the States because it's a biological product and it takes time.
Yeah, but then how do you make such innovations available on the continent, right? That's what we also need to be looking at. Because Zambia, Malawi, Zimbabwe forecast is 60 to 70% loss in their crop this year because of climate change.
Yeah.
Because of 43
And it's
days.
face to face. Literally, I need to get it in your hands so you can test it in your place and add it to your chain of inputs that you sell, right? And that's literally how this little company, it's like a $2 million a year company. But they've been working on this for years, and it works.
I mean, what we have is we have decades of trials to demonstrate,
Oh, yeah.
the efficacy of these
I
products.
get, so it's fascinating because I get, as an investor, I get a twice annual report showing the efficacy of this in the North and South Hemisphere, and it works, and sales are slow. But anyway, let's move on from that kind of innovation. What else is coming next? What in the next 10 years is going to make a big difference?
Yeah, I think, look, from our side, what we call the Feed Africa strategy of the bank has been revised and reintegrated as one of the 5 pillars of what we will be doing over the next 8 years at least. There is no major change in terms of the typology of investments and the subsectorial value chain drivers that we'll be having while deploying our funding. Basically, one would be around continuing working on the infrastructure. Second would be continuing working on anything related to productivity enhancement and production on the primary produce. 3 would be on the processing, increasing the added value and bringing in more private sector, even outside of Africa, investing in Africa in the processing. The 4th one would be really around trade, increasing the trading of food produce within the continent from a regional or Pan-African perspective. And that's part of our regional integration strategy. And the last one would be really to go deeper into the climate smart and climate resilient type of solutions that we would be bringing, including insurance produce, including disaster risk management produce instruments, and also including all the money that we're investing into technological transformation of the African agriculture. And I don't know if any of you attended the session on Ethiopia yesterday, but Ethiopia became today a net exporter of wheat. And part of that was, along the lines of this TAT, Technological African Agricultural Transformation Plan, that we brought to Ethiopia, working on the seeds and the climate resilient crops.
Great, thanks.
Yeah, I think I can only echo what Aaron has just highlighted. A big piece for AGRA, for example, is making sure we support governments in trade corridor work, mostly on trade. Intra-Africa trade, I think, is a big piece that we definitely still missing. Everyone keeps talking about that we are importing currently $100 billion worth of food. By 2030, it'll be $500 billion.
Hopefully not.
Yeah, hopefully not. Hopefully it'll be intra-African trade, right? And seeing how more of us, organizations and institutions like AFDB, as well as Omni on the private sector, can co-invest in countries to make sure that we respond to the whole value chain, from the production side, the processing, the post-harvest loss, reducing intensification of fertilizer use, which I like to hear, definitely. The cost must go down to our farmers, but also through 4 Ps, private, public, philanthropy model, because there is space for the philanthropy and foundation money to then take the initial de-risking part and create more innovative financing models.
That's a good segue. I'm gonna grab that one.
Yeah.
So we're adding a new P.
Yeah.
So one of the things that Africa Eats is doing right now is we are listing as a public company in the stock market in Mauritius, which is a little tiny stock market, but got to start somewhere. And we're listing us, and we're listing 2 of our investee companies. And we created a new segment for fast-growing, profitable companies of Africa to list in Mauritius. And our plan is to bring more every year. And our plan is to prove that works so that others can follow us, all the rest of the funds can follow us. Because we have a theory that there's a lot more money that would invest in this sector if only they were public equity instead of private equity, and liquid instead of illiquid. And we created a market maker so that these are liquid shares. So what we're doing, and just starting today with a baby step, is opening up the, 4 Ps, 5th P, 6th P? We're adding another P. which is to make this investable by anyone in the world who owns public equities, which is basically half of all the money in the world. Right? We'll hopefully come back here. We'll come back here every year, but hopefully in 10 years when we come back, we say, oh my God, look at that. That sector is now $100 billion of investment coming in from all over the world, so that there aren't any more imports in Africa. So it's the capital flowing in instead of the food. How's that sound? All right, any questions from the audience? Yes, ma'am.
To see another Washingtonian here. So I have a bit of a niche Kenya question. DFC closed among many investments, closed 2 investments in Kenya this past year. And I really have thought a lot about them and sort of what these 2 different approaches are. One was mine with Cooperative Bank of Kenya, driving through a guarantee up to 39 million in agriculture lending, primarily focused on lending to cooperatives. I see that in contrast to a company called Cinch, which, yeah, okay, good. I'm glad you know of what their model is. So it's essentially a mosaic farming model where they're taking fallow land, leasing it, and then, as this question could have stemmed from your conversation about aggregation, but taking fallow land under a leasing model and then growing, say, potato with off-takers such as KFC. So one of the things, and I've worked in Kenya for about 10 years now, is that I love so much about Kenya is the cooperative model and the strength that you have, that Kenya has this, sort of historical significance of cooperatives. And I think about, the cooperative model in contrast to a model like Cinch, which again is sort of getting at the same thing of getting inputs, getting a quality product out, aggregation. And I'd like the panel's thoughts, or particular, and I'm sorry I missed your name, I know it's not Jennifer. Thank you. Your thoughts on a model like Cinch as compared to cooperatives, and if they're, obviously Cinch is still very small, but, is there still a role for cooperatives in a place like Kenya that have had such, historical significance, but, in my conversations with Cooperative Bank, a bank set up to finance them, are finding that there's inactive members, there's still a problem getting inputs in, there's still a lack of financing, even though that's what the sort of the purpose of the cooperative is. So I know that's a bit of a long question, but I just would like to kind of hear you thinking about those 2 different models and sort of what the future of cooperatives are in Kenya.
So honestly, I think there's space for both, because not everyone is going to move into urban areas or leave their land fallow. So Cinch, just for the audience's understanding, is a company that was set up because they recognize that there's a lot of urban population that have land in rural areas, basically, and if how then they came together to lease the plots to create one larger plot so that they have economies of scale in production and both access to inputs, right? That's one model. But cooperatives is that I'm still the landowner, I still live on the land. How do we work together to then be able to access inputs, but we don't farm together, right? So Cinch is doing one large model. So I think there's room, there'll always be room for that. And that's why they have inactive members in cooperatives, because a lot of people have moved to the urban areas, and then, just finding the right model that works for that space or for that area, I think is what and as Agro, we will continue to support cooperatives in particular, because they need to be strengthened, one on governance, their ability to access finance, working with Cooperative Bank, for example, and the ability to keep producing. Yeah.
Yeah, and hold on, and yes, I'm in agreement with that. They're both. We just view as investors and aggregators, we view cooperatives as producers. They're the ones growing the food. We don't invest in the co-ops because co-ops are hard to invest in. And I've not seen yet, in 10 years, I've not seen I'm sure they exist, but I've not seen a co-op become the size of a national aggregator, and in part because they're generally a co-op in one area as opposed to having the aspirations of being a national aggregator. And so our national scale aggregators buy from many co-ops around the countries, so that we don't have production in just one spot. Make sense?
I think there is a role for both, but it's like, me as a DFI, where should we be focusing? Should we be focusing our efforts across those different spectrum, or?
Yeah.
Yeah, I think the leverage point that I found is aggregator. That seems to be where you can make the most difference with the least amount of money.
Yeah, thank you very much. My name is Elliot. I come from Botswana. I had a lot of Kenya, so I think maybe that's why I became a bit jealous, because in Botswana we've got an environment that is open for business. We have, we are importing 100% of our edible oil in the country, and there is a vast opportunity to invest in edible oil in the country. The president has recently put a stop on importation of vegetables, because we are predominantly reliant on South Africa. So there is an enabling environment. If there is capacity in the country, for instance, to produce oil in country, there is willing government to stop. So I'm appealing to the panel and also the investors maybe in the room to look at Botswana to invest in the edible oil space.
So maybe after you want to talk about the inequality of capital flows across the continent.
No, I mean, we don't have a pre-decided country allocation.
Not your allocation, just in general.
In general.
It's not fair. It's not fairly distributed.
No, I think there is imbalance in terms of what the investable universe is among countries. You can't expect the same type of project in Liberia, Sierra Leone, or in Ivory Coast, right? So probably that the capital allocation, especially from private sector operators, which are not based on the continent, are going through a certain review and analysis of what the perceived risk is and what the specific opportunity is on the market. So this is where I think it's very important to have partnerships with other players, with development institutions like ours, but also many other banks and regional institutions that are very active in the African continent, to basically make sure that there is and that asymmetry of information is basically reconciled to some extent.
But I'm going to add
go
something.
ahead. Okay.
I just want to challenge my brother from Botswana. Part of the challenge that people are seeing is, how can I operate in Botswana, right? You're not visible, as he was just highlighting. And are there operators willing to come and work in Botswana? Because why we keep talking about Kenya is because we keep saying Kenya's open for business, invest in Kenya, Kenya investment mechanisms, etc. Whereas with Botswana, especially in agriculture, if you ask anyone around here, I think they know about the cows and the cattle, right? They know about beef. But what other opportunities is Botswana really shaping for? Even Agri could potentially come and assist, but we're not in Botswana, so sorry. But yeah, you just create what is the investment opportunity for Botswana.
Okay, apparently that was 5 minutes, so that question here. This one, and then that'll be the last question.
Hi, I'm Tekla from Grounded, and I just wanted to make one small comment, and then I have a question. On your point on the fungus, we are working with thousands of smallholder farmers on teaching them how to make their own high-quality compost that's enriched with fungi and bacteria, and are actually in some cases achieving yields on maize and onions, tomatoes, that outperform the yields of large-scale commercial farms. So I just wanted to make a comment. You might not need the fancy fungus from the US. You can actually use. I
was at a mushroom farm in Malawi, and you grow mushrooms on basically compost that's been steamed, so there's nothing growing in it. Yeah. So you've killed all the fungus and all the bacteria to grow the mushrooms, but then you take the leftovers and they used it as fertilizer. And their maize was like twice as tall as I've ever seen.
Yeah, and so we can reduce costs a lot, almost to zero for farmers, input costs, and we get a 2 or 3 times higher income. My question is, on the topic, is food security an ambition that is high enough to strive towards for the continent? I actually sometimes think it's like food security, that just means that people can survive,
Again, I don't do food security, I do hunger. SDG number 1 is poverty. SDG number 2 is hunger. Everyone should eat. Everyone should be able to eat every day. And in the bigger picture, the continent runs out of money if they have to bring in food. So food security, to me, is everybody eats and the food is grown somewhere nearby, a reasonable distance away.
So just to answer that question, sorry, there was the Africa Food Security Plan, if you recall, in 2022 that was launched at the US Africa Leadership Summit. And for sure, we started questioning, is that ambitious enough for the continent just to be secure, food secure? So we're now calling it food systems. I know it's a lot, trade and initiative. Just part of it is we are, in ourselves, we're already a big enough market. So it's just about being, about poverty alleviation and bringing money back and maintaining it on the continent. And I think you're right, like food security is one level, but we now need to be like prosperity for the planet, for.
Oh, planet would be good too, but.
Yeah, sorry, for the continent, yeah.
All right, we're gonna run out of time, so last question over here.
This question, Ruby from Supiva, supporting the divas in Africa. This is not a gender question because we have a female on the panel, thank you. But this question comes after the DFC question, and we actually do some work with the African Guarantee Fund, so absolutely, guarantees are great mechanisms. But the other side of it is, sure, you can have a guarantee to a financial institution, but at the end of the day, the cost of capital is still going to be very high. So with the players on this, one of my favorite models right now is 1 Acre Fund, and I was actually on one of 1 Acre Fund's farms, and the farmers, it's 22%. Yet you have a number of their farmers who are still very happy to take that 22% to pay over an 8-month time period. Meanwhile, any of these financial institutions, I think you said that you're backing co-op. 22, 24% is their interest rate to farmers if somebody's borrowing? That's exactly it. So here's my question to you is, how can we bring down the cost of capital? What are we as an ecosystem doing to help bring down the cost of capital and pass on the savings to, therefore, those who are going to be borrowing?
Yeah, I'd say the model's backwards. So we have an entrepreneur who used to work for 1 Acre Fund. He used to be a collector in Uganda. And instead, he started a company called AgroSupply. And he flipped it around. He said, no, they have the money. Like he had to go and collect it after the harvest, and that was hard, and they lost a lot of money for 1 Acre Fund when they first started. So his company got started and said, no, what they do is they send the agent to figure out what inputs they need, which seeds, good seeds, and whatever inputs those seeds need. And then they set up an investment plan to save up enough money for those seeds. And that's scratch cards in Uganda, because mobile money is not ubiquitous enough. And the farmers have been able, 27,000 farmers, save up enough money to buy the inputs they need for that season. And that costs them nothing. Their cost of capital is 0. And it works. All right? And not only does that work, but they have taught them. They don't talk about it as layaway. For those of us in the States, that's what we would call it. It is layaway. They talk about it as investing in your farm, investing in agriculture. And they have taught 27,000 farmers so far how to invest in their farm. And so after a few seasons of earning profits with no interest costs, what does the farmers do? Well, they start investing in their farm. They invest in some day-old chicks. They invest in a piggery. They invest in solar power for their house. They invest in a house. And so there's a great video of him interviewing his farmers. I think that's the solution. That's the for-profit solution that gets them out of debt and out of the cost of capital and into the world of being prosperous. So beat that.
I think our moderator has given the answer.
I think we should end on that one. All right. We're at time as well. So thank you. We'll stick around if you have more questions.
Okay, great. Thank you. Thank you, Lina.